Okay, so we're going to talk through today the two phases of the CFFX course and how it's going to work and what you guys have got to look forward to, what you guys will get access to for free with me as thank you for supporting me in these early phases, and then the extra little bit that you may be interested in kind of adding in on top. So phase one, as we discussed, is the foundation course. So market structure. Now, a lot of this, as you probably know, is already going up onto the YouTube. This is kind of a first run through for me. So what ultimately I'll be doing with this is once I've done this first course completely through YouTube, is I'll be re-recording like a refined version of it that again you guys will have access to. So you'll kind of follow along with my journey, really, guys, and you'll have access to all of the content as it comes out, whether that's mentorship content or obviously YouTube content. You'll always have access to that, of course, but the mentorship content you guys will always have access to as a thank you for supporting me in this early part of my journey. So market structure obviously is most important. We've then got the supply and demand, okay, which is the kind of the next step. And then we've got in phase one basic entry criteria. So what I'll give you with phase one is enough information so that you can comfortably trade, and enough knowledge and enough understanding of how this all works so that you can pass a prop firm challenge. I'm going to set it out in a really, really simple way, with really, really simple rules for you to follow, so that you can take it to pretty much any prop firm and you can beat it. Simple as that. Okay. These three are your foundation, and then you build up on top of that, basically. So you've got your market structure, you've got your supply and demand, and the basic entry criteria. Now, this is all on YouTube at the moment. The first run through of it is anyway. Supply and demand, that's nearly finished. I recorded the last video on that today. And then the basic entry criteria, that will be coming in the next couple of weeks or so. So before long, we're going to have the basics of the foundation course kind of fully completed. Now, there's a couple of rules that I want you to follow in this first phase. Despite what you see on Instagram, YouTube, social media, wherever you go, I want you to trust that I've been where you are, and trying to chase what you see on Instagram, trying to chase even, I trade quite simply, to be fair, in comparison, you don't ever see me chasing like 100R trades or 50R trades. It's not something I do because I think it's unrealistic. But I wouldn't even expect you to trade like me just yet, because my trading strategy is kind of pretty refined, and you'll see some of my trades and they'll look great, but don't chase them just yet. Learn to walk before you run. Okay, there's a million and one analogies that I've used for this before, but if you're learning any new skill, let's say, I don't know, you were learning to play tennis, okay, and you're not going to go straight in and start trying to return serves from a professional tennis player, are you? You're going to go in, you're going to have the ball gently hit to you, you're going to learn to get it back over the net, you're going to learn to hit the ball, and that's basically what we need to do in phase one, is we need to learn just to hit the ball gently over the net. We need to get the basics sorted first, and part of that is not aiming too high. So 2 to 4R is all I want you to trade in this first phase. Until you're funded, you don't need to trade any more than 2 to 4R. The 2 to 4 is something that you'll work out in your back testing, and it'll be something that is personal to you. But 2 to 4R on, say, 50% per trade, let's say you're taking 0.5% per trade, okay, if you're aiming for, say, 2R each time, then it's only going to take 16 successful trades to get 8%. Okay, 16 times 0.5 equals 8. Okay, and my Forex funds, they need 8% to pass. Okay, so you don't need a huge amount of trades in order to pass any of these prop firm challenges. People always chase passing it in a week, or passing it in 2 trades, or passing it in 1 trade. It's a waste of time. It doesn't teach you anything, doesn't learn you anything. Unless you're a professional trader, you shouldn't be chasing that. I had a great week this week. I passed phase one of one of my latest challenges, and I passed it in, I think, about 7 days, which is fantastic. I'm really happy with that. But that was an anomaly, and that's not something I'm chasing. It's just something that's happened because I've gotten used to trading in a certain way, and I've got good at trading in a certain way, and every now and again you're going to hit that home run. Has anyone heard me go through my baseball analogy before? I think I've discussed it a couple of times, but if you haven't, I'll go through it again. So imagine trading like, again, baseball, and everyone wants a home run. But we all know that in baseball, a home run is unrealistic. It's not something that you're going to get all the time. If you constantly chase home runs, you will miss out on regular first, second, and third base plays that you could have obviously won the game with. And it's the same sort of mentality here. If you're constantly chasing 50R trades when you're still new to this, which realistically aren't going to happen regularly anyway, do you think that these traders get 50R every single day? Of course they don't. If they were that good, they wouldn't share their information with you. It's as simple as that. They would be off social media, sitting on their millions of dollars, and they would not be sharing their information. What happens is that they don't show you their losses, and they don't show you their smaller trades. They just show you the really like glossy looking ones, the ones that hook you in and get you to spend money with them. So if you chase the home run all the time, you'll miss out on the first and second base plays. Now, aiming for a 2R or a 4R trade, that's like your first and your second base. Okay? And if you can get consistently good at hitting these all the time, you are going to pass any prop firm challenge in the marketplace. And once you're funded and you're bringing money in, you can then start to change these rules or refine these trades if you need to. At the end of the day, if you're consistently passing prop firm challenges, in 6 months' time, you could have 600 grand's worth of capital, and that's a life-changing amount of money you got coming in. Let's just, to make the math simple, let's say you got 500k's worth of trading capital with prop firms, okay, and you make 10% per month, okay, that gives you 50k per month. I forget that we work in dollars. I've got, there you go, right. That's making you 50k a month profit, okay, which if you're taking 80% of that is giving you 40k profit per month. Now, you don't need any more money than that, and I'm sure none of you are making anywhere near that kind of money just yet, okay? I'm sure you'll find ways to spend it in the future, but trading just at 2 to 4R will give you enough skill in the marketplace so that you can pass any prop firm challenge. And if you're passing prop firm challenges, you're then going to start earning money. And after 500k accounts, you've got 500k. If you make 10% on that in a month, you get 50k out of them. They give you 40k of it. That's it, job done. Now, any questions before I move on? Hello? Anyone there?
No,
Yeah?
no question.
Yeah, no questions? Okay, cool. Does that all make sense?
Yep.
Yeah, okay, cool. So there's a couple of rules. Let's just get rid of this. Okay, 2 to 4R trades. That's all we want. The profit percentage is based upon your skill. So I will trade a total of like 0.6% on a trade, but that's normally over like 4 or 5 different entries that I've taken. My first trades, I normally take about 0.1%. And you could pass a prop firm challenge aiming at, you know, let's just bring a calculator up. Okay, you need 8%. Okay, you need 8%. Let's say you were getting in 2R trades, okay, and you traded at 0.1% per trade, okay, 0.1%. We want to get you up to, let's have a quick look. So, 2 of them, 0.2. So, over the course of Over the course of 40 trades, okay, which you could take over a 30-day period, if you're just aiming for 2R per trade and you trade at 0.1% per trade, in 40 trades time, successful trades that is, of course, you'll have hit your 8%. If you're aiming for 4R, obviously you can divide it in 2. Okay, 20 trades will get you there at 0.1%. Now this is where the strike rate comes in as well, okay? Let's say, and what I want you guys to be aiming for is something like a 50% strike rate, okay? If you need 20 trades, then naturally that will mean that you actually have to take 40, okay? Which over the course of a month, okay, is probably doable over multiple pairs. But this is going to get you into profit. And again, in these initial phases, you're probably going to blow a few prop firm challenges. It's probably going to happen. It's probably going to take you some time to even get close. And in that time, you have to get confident with your trading system. So 0.1% is a good place to start off, and as you get more confident, you can increase it 0.2, 0.3, 0.4 to up to 0.5, and then this is when you can start trading more comfortably and ultimately, start winning a bit more sooner. So the most important thing with prop firms is to make sure you always stay in profit, because if you stay in profit, it'll always give you a free redo. Okay, now I talk about prop firms quite a lot, and I'll explain to you why. There's no point ever in risking your own money. Whilst there's prop firms available, you don't need to risk your own cash. If you put 50 grand into a trading account, that broker goes bust, you lose 50 grand. If you put 50 grand into a trading account and you make a stupid mistake and the market crashes, you lose 50 grand. It's as simple as that. With a prop firm, even if you've got £1 million worth of capital, if you do something stupid, you haven't lost £1 million. And in 3 to 6 months, if you're good, you could build up that £1 million again. How long is it going to take you to build up £1 million in real life? It's a long, long time. So whilst there's prop firms around, don't trade your own capital. It's just stupid. 50 grand in an account, you could buy multiple challenges for that. And if you're good and you can make 8% a month or 10% a month if you're going for FTMO, which is their profit target, then you can build up these accounts really, really quickly. You can have 10 different accounts with 10 different prop firms, all copying the trades from one another, and it's a really good way to kind of maximize your capital. So I personally don't risk my own capital. All my trading is done through prop firms, simple as that. Okay, now getting back to, we went on a bit of a tangent. So 2 to 4 hour trades, that's what we're looking for, okay? And until you get really good at consistently getting these at a 50% strike rate, okay, we don't move on to anything else. That's all we need for the time being. This is when you're learning to play tennis, this is you learning to knock the ball from one side to the other and get it back to the other player and to get it back into other parts of the court. This is your baby steps, okay? Once you get good at that, we can move on to the next bits. We are sticking to medium time frame or higher time frame only, okay? And what that means is no 1 to 3 minute trading. Okay, the 1 minute chart, I don't even trade. You will see some traders do it, but the most of the traders that that trade the 1 minute chart, they lose money. It's only very successful, very experienced traders that make money on the 1 minute chart. I could trade it, but I choose not to because it's stressful, it's hard work, and you've got to be on the charts all the time. Okay, there's a certain balance you've got to find with our style of trading. If you're looking for positions that, let's just come down here a little bit, okay? If you're looking for positions that happen over, say, the period of a day, there's only so much movement that can happen in a day. So that is the start of a new day here. That's the end of the session there, okay? That is move down, move up. There's only so much movement that can happen in a day. And if you're trading like me, the positions we hold them for maybe 2 or 3 days tops. So going lower than the 1 minute chart doesn't make sense because the setups that we need, they appear on the 5 minute chart, they appear on the 15 minute chart, the breaks of structure we're looking for, the imbalances we're looking for, all these things that we look for in our trade, they appear on time zones between the 5 and the 15 minute. And all the 1 minute does, I found anyway, was just trick you into false positions. So I strictly don't trade them anymore, okay? There's only so much movement that can happen in a day. Very rarely will the price, drop out the sky. It doesn't happen often. Now, so we've got medium time frames or higher time frame only. Okay, that means no 1 to 3 minutes. Okay. Let's just put this on a new line. Oh, we got that down there already. No 1 to 3 minute trading. Okay, and positions taken on the 5 to the 15 minute. So for me, when I'm looking for a trade and when I want to get into a trade, I'm waiting for that position to show up on the 5 to the 15 minute. And I'm going to talk you through some of those in just a moment, okay? This is going to give you a basic structure to pass a prop firm challenge. Obviously, part of this is journaling and backtesting. Out of you guys at the moment, how many of you are actually trading at the moment, as in taking trades in live markets? Anybody?
Yeah, I'm not doing it as yet because I'm still trying to refine my skills as a trader. To be fair.
Yeah, fair. Who said they were?
Me. I'm doing it.
Itu. Okay, so are you journaling? And look, don't worry about it if you're not. Most people don't.
No. Okay. Not really. Not really. Yeah.
Okay. So journaling is really important to your trade progression. Okay, and the amount of time that you spend refining your blade, if you want to look at it that way, is really, really important to how sharp that blade is when you go into the market. So journaling is really, really important. At the end of every single day, you want to be taking note of the positions that you've taken, writing about them, writing what was good, writing what was bad, because that will then reinforce good habits and it will start to get rid of bad habits. If you don't journal and say, like, what I would normally do is I do this, right? Took trade on GBP USD, okay? Didn't meet all my criteria. Only met 4 out of 5. Checklist. Failed trade. That then, the act of doing that, it teaches you to be better. How profitable are you at the moment, Itu? And again, no judgment here in any way, shape, or form. How profitable are you at the moment?
No profitable.
Not enough. Okay. And do you journal because you've never been shown how, or do you journal because it's not nice seeing how you've messed up?
Like I would say, like, I didn't really know how. So like when I tried it, I felt like I'm putting maybe too much information and it wasn't concise. So
Yeah.
so I guess that I don't really like know exactly how to journal.
So there can never be too much information. What I'll do, I'm on another computer at the moment, so I can actually record with a webcam. So I can't show you right now. But what I'll do is I'll put a little thing in Discord later, so you can see exactly how I journal. I would say you can never put too much information. Okay, but if you're finding the length of time it's taking to do your journaling is putting you off doing the journaling, then stay away from journaling. Really, it's as simple as that. If you catch my drift, yeah. So just make sure you are doing it, even if it's just a case of doing this, right? And you put this on a spreadsheet. GBP USD trade didn't meet criteria. Stop being a dick. All right, even if it's something like that, to put you off doing those things again, there's a power in writing your thoughts down and seeing them and visualizing them and then seeing them back and reading them back to yourself. When you were at school, you never learnt very well from just sitting there in front of the teacher and listening, did you? How you learnt was you would write down what the teacher was saying. You'd copy that into a textbook. When you're revising for an exam, how do you learn that information? You get the textbook out and you write down in your notebook exactly the part that you're learning. I remember learning osmosis in my GCSEs and having to write down osmosis and semi-permeable membranes and the transference of one highly concentrated and all this nonsense that I've obviously forgotten now, but at the time it worked well to get me through my exams. So writing these things down is really, really important. Even if you do a GBP USD trade didn't meet criteria, make sure all criteria met next time, okay? You're at least gonna think about that a little bit more. Vinny, I've just seen you're in. Are you there?
Yeah, hello.
Yes. Welcome, man. How you doing? You good?
I am live.
You're live.
Yes.
Decent. I like it.
Yeah, it's an alright day.
Say again?
I say, yeah, it's alright.
Good man. Well, nice to see you. So make sure you're journaling in some way, shape, or form. How have you been doing it previously, Itu? Have you been doing like a spreadsheet? Have you got like a journal and notebook?
Like I tried both because like I didn't want to have like stuff everywhere. So I think where I did it most was like in a spreadsheet.
Okay, cool. Yeah, spreadsheet. I would definitely suggest spreadsheets. Once you've got your journaling spreadsheet ready, your back testing becomes easier as well because it's basically just the same spreadsheet. So you just create another copy of it and then you back test and you then kind of go through the markets, and as you're going through the markets you take your trades and you write about them just like a journal. Now this process of writing about your trades, making sure that you're documenting what worked well, what didn't work well, etc, etc, this is what progresses you. This is how you learn in the markets, and this is how you get better. For any of you who've been in any kind of education in recent years, everything that you learn, you write down, and then you go back and you revise it. This is your revision. This is how you get better consistently. So if you're not journaling already and you are taking trades, you need to start journaling. It's as simple as that. Okay, for me, my trading has got 10 times better since I've set up this group, because now I've got people to be accountable for. I don't now take any trades that aren't perfect, because I'll be embarrassed if I take a shit trade that doesn't meet my rules. That's embarrassing for me. I'm supposed to be teaching you guys if I can't stick to my own rules. So for me, having that accountability has made me a better trader. And what the journal will do is it will keep you accountable. You will ultimately force yourself to stick to those rules. And there are going to be times where you're going to break the rules anyway, but that's all part of learning to be a better trader. Okay, in the same way when you're playing tennis, right? You're learning to play tennis. You might go for that really hard shot, trying to like trick out your coach, or trying to get one up on your coach, and it goes wrong, and you think, why did I do that? It was stupid. You're going to do that in trading as well. Okay, but ultimately, the entire process is a constant learning process, and you have to be able to review and self-review, and your journal and back testing is how you do that. Simple as that. Okay, so make sure if you are trading that you do your journaling, you do your back testing. Okay, so phase 1 is to get you funded. Now you only get to phase 2 once you're funded. Okay, phase 2, I haven't even started thinking about it yet. Okay, is only after you're funded. Okay, and I'm only going to let anybody pass and go across to phase 2 once they have shown me they've got to withdraw. Because I'll tell you this, I was funded a year and a half or so ago multiple times, didn't actually get any money out for like 6 to 12 months. So you need to make sure you're taking money out, because the psychological games that your mind will play with you once you're funded, it just changes everything. Now you can make money off it, everything changes all over again. So I'm only letting people go across to phase 2 once I can see they've been funded and they've had some kind of withdrawal. They've got to, by that point I'm going to know you pretty well. By that point, I'm going to know whether or not you're ready for phase 2. Okay, phase 2 is advanced entry criteria. Really, we'll talk about things like Wyckoff theory. And ultimately I'll teach you all of my setups. Okay, I have about 4 setups that I use in live markets that you could probably piece together, to be fair, from what you've seen from the Discord chat, but I'll actually teach you all of my setups. I'm not going to bog you down with loads of different setups at the moment, because it will just get too confusing, but I'll teach this in phase 2. We'll learn how to refine zones, refine stops, refine your profit taking structures as well, and how to maximize trades, basically. So this is where we're taking trades past kind of like 4R. For now, I want you in and out of the marketplace really, really quickly. I want you in and out of the marketplace, taking your profits and running. For those of you who have traded a little bit so far, how many times have you been holding on to a trade for like 4, 5, 6R, and then it reverses on you and you end up either break even or a loss? How many times has that happened to you? A lot, I bet.
Many times.
A lot of it.
Happens all the time, doesn't it? All the time. And that's because we're greedy.
Yeah.
We're greedy. We want it now. We want these profits. We want to pass a prop firm challenge in 2 days, and we're greedy. Humans are inherently greedy. That's why we're all so fat these days, because can't stop eating sugar. We can't stop eating junk food, all right? It tastes so good. We want to eat all of it all the time, all right? Same thing applies with trading. We see a trade that could go to 10R, so we don't take any profits off, and then it goes up to 3, 4, 5R. We start, and I know exactly what goes through your head. You sit there thinking, I should take some off, but I'm going to hold it. What if it moves up here? What if it moves up here? And then what happens is it reverses on you and it takes you out and you get a break even or a loss. It's the most frustrating thing ever. So I'll teach you how you can maximize your wins and how to maximize your profits, okay? And then I'll go through some tricks to kind of reduce losers as well. To give you a bit of background on that, I've got really good lately on making sure my losses are tiny and my wins are massive. So whereas before I would take one position and I would hold to target, okay? So if it wins, let's say it's, I don't know, a 1-to-1, okay? 1-to-1, just for easy, okay? Let's say it's a 1-to-1. If it wins, I win 1R. If it loses, I lose 1R, okay? What I'm doing now is I will take one position when I see a trade. Then I'll take a second position when I've got confirmation. Then I'll take a third position when I've got further confirmation. So if this first position loses, all I lose is 1R. But if these win, I get 2R and then 3R, and that's how you kind of maximize your wins. Once you get further confirmation that a trade is going in your direction, what you can do is you can add into the trade. So then your wins become, say, 3R, and if it runs to 10, okay, you've got yourself 30R off the trade, let's say. So let's say it runs to 10R, you got 3 positions in, you might get 30R out of it. But if I lose, I still only lose 1R. And that really is the key to profitability. Now, these are just things that you guys can look forward to for now. For the time being, what I want you to do is concentrate on getting consistent 2R and 1R trades out in the marketplace. Because if you can do that, then ultimately you are going to be in a much better position than you ever have. How comfortable, those of you who are trading so far, how comfortable are you with consistently hitting, say, a 2R trade right now? Anybody? Hello?
I mean, I only just started trading again last week, so
Yeah.
yeah, I didn't even take a trade. I didn't even see anything I liked.
No? Okay. So that's kind of exactly the example. You know, I can tell for the from how quiet everyone was there that this is, if you're not 100% comfortable that you could take 10 trades and at least half of them would go to 2R, then we're not ready for anything more refined yet. We're not ready for lower time frames, and we're not ready yet for 10R trades or even 5R trades. Again, we build this from the ground up, and this is what nobody teaches out there. What happens with all of these other courses is you get the full course. Vinny, you know from MentFX, you get the course, you've got all the Wyckoff info, and you see MentFX and the other people in the group taking these huge trades all the time, and then you're kind of expected to do the same, and it doesn't work, and there's no kind of structure around how you should be trading in the early phases. So that's ultimately what we're going to do. Is there's going to be 2 phases to it. For now, you guys, I'm going to help you with this, and I'm going to help you get funded, okay? And I'm going to help you get some extra cash in that you don't have right now. Now, there is a third part to my mentorship that, as I've said, unfortunately won't be completely free to you guys, but will be heavily discounted if you did want to have access to it. It's not necessary, but it's something that I'm offering that I don't see many other kind of trading mentors out there, okay? And this is the weekly coaching package. So the way this will work is you'll have access to all of the content, of course, okay? This is if you were, say, a paying customer. You'd have access to all of the content. There'll be a weekly catch-up with me, which is where we can discuss how the week has been, discuss the trades you've taken, what was good and bad. We'll discuss your journal, and I'll get you to send me your journal each week, and I'll go through it, and I'll see whether the journal's any good, whether you're journaling the right way, and what we need to tweak. We'll discuss any back testing, and I'll set you assignments, basically, okay? Kind of homework, so that you can really kind of develop your skills and accelerate your progress. This weekly coaching will mold you into a trader much quicker than anything else, okay? It'll mold you into a profitable trader a lot quicker than anything that you'll buy online. How many of you have gone through any kind of mentorship course so far? Off the internet, pirate, bought it, doesn't really matter, don't really care. How many of you gone through a course so far? Yeah? Okay.
Another course that I'm doing at the moment as well.
Yeah? What's that one?
Yeah. It's Yerimi University.
Okay. So ultimately you get all this course content through, and you watch the videos, and it all looks very good on screen, but actually putting it into action is really, really difficult, because it's like, again, let's use the tennis example. It's like Roger Federer, he had a bit of a weekend, didn't he? It's like Roger Federer telling you how he plays tennis, and then you expecting to be able to play tennis as good as him, okay? That's why it doesn't work. That's why these mentorship kind of courses, they only go so far and they only give you so much. So with this kind of one-on-one weekly coaching, what I can do is I can help you grow a lot quicker. We can catch bad habits, okay? And we can ensure good habits stick. Get to know each other, of course, and how your trading personality might be, because everyone's trading personality is different for many reasons. You know, what they want to chase, their time frames, when they can trade, that sort of thing. Everyone's trading personality is different, okay? And ultimately this will get you funded a lot quicker. So this is something that will be available in the future, probably in the new year sometime. If that is something that of course is of interest for you guys, then just let me know, and I'll be more than happy to help. And in the meantime, over these next few months, take advantage of the one-on-ones. You know, I'm more than happy to jump on a call with you guys for kind of 30 minutes, have a talk, you know, have a chat, and basically offer you this, discuss what you're doing right now, and help out as much as I can. So, you know, feel free to take advantage of that whilst I'm not as busy with the mentorship, and whilst it is all for free of charge for you guys. Just message me anytime, all right? So any questions?
I'm good so far. I'm
Okay.
with you.
Okay, cool.
Yes.
So
Yeah.
so that's what we're looking at for the kind of the CFFX course. Now, I said we're going to do.
Wait, hold up.
Say again?
Said hold up. How much you think that weekly coaching package is gonna be?
I don't know. In the early days, pretty cheap to be fair, because I want to kind of make sure it's working quite well. I was thinking of something around $100 a month, was my kind of thought process at the moment. So it's something that is, again, it's in its really early stages. It's something that I will do, and I'll need to work out pricing. And obviously in the early phases of it, it will be cheaper than it would be in the long term once, you know, I get busier and, you know, it's in high demand. You know, naturally the prices will grow. But for you guys, it will be very, very cost effective. Let's just put it that way, okay? I wouldn't, you know, as I said, you know, I'm thankful for you guys supporting me in these early phases, so you'll always be looked after by me. Simple as that. All right.
All right.
So we got some time for some Q&A, and then I'm going to go through a bit of a trade breakdown. I might have to restart the teams in just a moment, guys. But did anyone have any questions for me with regards to kind of trading or trades that were taken or anything like that?
I've got a quick question about, you know, breaks of structure.
Yeah.
Sort of changes of character.
Yeah.
Like, for example, if you're looking for short positions, right, which obviously the market's full of short positions at the moment.
Yeah.
With these breaks of structure, can they be in any direction, or does it have to be in the direction of the sells, or do you have to sort of where the price goes down?
So
will it
breaks
over-
breaks of structure really should be in line with your trend. Okay, so if we look at Bitcoin right now, as you can see, we are heavily bearish. We did have these major breaks of structure that, if you remember, I don't know if you were watching along with when I was trading earlier in the week, but as I was trading them, I saw these as major breaks of structure to the buy side. Now, actually, on this time frame, these aren't major breaks of structure. Can anyone tell me why they're not major breaks of structure?
Because they haven't broke the previous highs.
That's it.
From before.
That's it. So for us to consider a higher time frame buy, we want this to happen. We want this to break, basically. That is our major break of structure. Okay.
Yeah.
So all we had on this chart really was some minor breaks of structure. Now, obviously, if you go down to lower time frames, they are major breaks of structure on the lower time frames. But the trend we're following right now is this massive downtrend. Obviously, Bitcoin's really heavily bearish, as you can see. We've got this massive, massive downtrend here. And this is basically the higher time frame trend is what we're watching. And we should have expected, I did take a couple of buys, I think around, I can't remember, around here or something, and they ended up failing, and they were stupid in hindsight. But look, you know, we're not going to get it perfect all the time. So if you are trading with the trend, we want the major breaks of structure to be in line with our higher time frame trend, obviously. I would say, again, in these early stages of your trading career, stick with the major trends, because it's much easier to trade. You know, these counter trend moves, you can get some half decent positions, but they're ultimately limited by the supply. So let's say you traded this, for example, Okay, you took this position here, you got into it somehow, and you're expecting price to at least come up to 50% of the zone. Well, you might have just got it. No, you would have been stopped outlet. Okay, if you've had a wide stop maybe, but you're ultimately limited by the higher time frame trend. If you're trading counter trend, then the expectation is that it's not going to break this because it's counter trend. So the probability of the trade might be high, but the potential of the trade is low because it can only go a maximum of 4.2R. So I'm not fussed about taking those sorts of trades anymore. I'd much rather wait for this. How much easier is that to trade? You basically got no work to do. Where's the low? You got no work to do, and you've got a 5R. And if this keeps going, you could have a 10R easily. So I would say trade the breaks of structure that are in line with your higher time frame trend. So that would have been a major break of structure. The other thing with trading counter trend, as you can see here, is it's pushed up, pushed up, pushed up. It didn't even get to the supply zone and it rejected. That's half the problem with counter trend, is that it can reverse on you like at any time. There's no rhyme or reason around it. This was a supply zone that it rejected off, but why would it reject off? I mean, if we draw our GAN box on and we put it into premium and discount, I bet it even just let's get rid of that. It just got into premium, kind of, but no, it didn't. Technically, that didn't even get to premium. So price can reverse on you when you're trading counter trend quickly. You've got to get in and out really, really quickly. So yeah, if I were trading for you, if you're trading at the moment, Ibra, I would suggest just sticking with the pro trend moves because they are much more reliable, as you can see, compared to these ones. Okay, does that answer your question?
Yeah, with these breaks of structure,
yeah. Okay, and you'll keep getting multiple ones, and it's these breaks of structure that signal us into these trades. This is what we're looking for. This is what we want, and you can see price come back into this zone. It was really mucky. I didn't really get any setups here, but then these are the two trades that won me my 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 challenge last week. So this didn't give me a setup. I was expecting a 3 push break setup, as you can see. So 1, 2, no, we didn't really get a third push. I'm dropping a video pretty soon on kind of the final bits of the supply and demand, and I talk a lot about making sure we're not chasing average trades. There's a trader that I used to be that would have taken this trade and would have seen this down to the first target and been like, oh, do you know what? I don't need to wait for a third push anymore. All I need to wait for is 2 pushes and then a shit push down and then a return. What happens is that then builds bad habits. This is why sticking to your rules is so important. Because if you stick to your rules, it will prevent this from happening and going wrong on you. Stick to your rules. So I didn't trade that. The reason why I didn't trade that is because we didn't get the third push up. We didn't get the impulsive move down, and we didn't get the return. That's my entry, so that's how I trade it. If I don't get that entry, I don't trade it. But price did start moving away, and it did give us breaks of structure. But it's really simple, guys. You don't have to be that quick. A lot of us, what we're doing all the time, most traders, is trying to catch a reversal constantly. We're trying to catch it at the top, catch it at the bottom, and those are actually really difficult trades to get, because there's no clear indication yet that we're going south. Now, what I did on here is I saw price moving down, and then about 1 o'clock, I think it was. No, 11 o'clock. I think the next one was around 1 o'clock. Yeah, okay. So around mid-morning, I saw this really good impulsive move down. Okay.
Yeah.
And
left a bit of imbalance as well.
That's it. We've got an imbalance in there. Really nice imbalance. Now, when these moves happen, let's just get rid of that for now. When these moves happen, this tells us there's big players in the marketplace. We've had this really kind of mucky move down, not really giving us that much, and then all of a sudden, impulse correction, and then we've got another one there, look, with another imbalance down there. Okay, this tells us that there's bigger players now coming into the marketplace, and this is where we want to start trading. So all I did was I wait for this to happen, and then you can probably see what I've done. I took it on 50% of the zone. You can see there, pretty much perfectly, look. But I saw that there was an untested supply here, if you can see that. I saw that that was also untested. So I wasn't happy doing a really tight entry. Now, I would have been fine, as you can see. I would have been absolutely fine there. Or I could have done it to the, but it doesn't matter. I trade in a way that's safe for me. I knew that price had the chance of wicking up into this untested supply, so I wasn't prepared to do too tight of a trade. For me, that meant that even if I'd held it all the way down, I'm only getting 4R instead of potentially 8R. But I would rather get 4R than be wicked out and get none. And that's my mindset with my trading, is that if I see something above that price could wick into, we'll lose a few R, doesn't matter, there's going to be another trade, and if I get 2 or 3 of these 4R trades, I'm getting 12R out of the marketplace. If you get 2 losses, are you going to go back in for the third? Let's say number 3 was your winner, but you've taken 2 losses, are you going back in for your third? Most people don't.
Yeah.
Most people take 2 losses and then they stop, and then the third trade goes their way and they're like, shit. Whereas I've got 2 4R trades out already, I'm winning, and my 4th trade takes because my mindset's good. So going slightly wider with your stop is a really safe way of trading. Now, price did come back and retest, but this is around New York Open time, and this happens quite a lot. So the same thing really. I could have gone a lot tighter on this, and I missed the perfect entry, and I could have gone tighter, but I did exactly the same thing. I put my stop above the previous supply just in case. I missed the perfect entry. That's okay. It's not the end of the world, and I only needed here anyway. I took both trades off here, and that passed me my challenge. So for me, unless my trade entries are perfect, I'm not getting into them. Okay, there's a trader that I used to be that would have taken that trade, but that built so many bad habits. I know that if I want to trade, I want an impulsive move with an imbalance, and then a return to at least 50% of the zone. And that for me, for a continuation trade, is golden. And like I said, let's say you'd had held these all day, you'd have come out of that with 9R, 8R. Now that's a really good trading day. If you're trading at 0.5%, that's 4.5%. If you're trading at 0.25%, that's 2.25% in 2 trades. And let's be honest, guys, look at those. Are they difficult trades? They look pretty obvious, don't they?
Yeah.
The best trades are the ones that look obvious. The hardest thing as a trader is waiting for those ones to appear, because you feel like you're going to miss them all the time. But the problem is that you don't miss them all the time. They happen all the time as well. You just got to learn to be a bit patient. Just wait for everything to line up. Any other questions, guys?
Hey, check.
Hey, man.
Hey, if you enter perfectly on that second trade, how much R would you have gotten?
So, if I had taken this trade perfectly, let's say I'd used the high and I used 50%, it would have taken me about 5R, so it would have doubled my profit.
Okay.
But yeah, but I'm not really fussed about that. I'd rather take 2R consistently. If I could guarantee myself 2R trades all the time, I take that all day long over a few 10R trades. 100%. It's so stressful losing. Vin, you know what it's like. How stressful is it losing?
100%. It's crazy.
It's so stressful losing all the time, and like when you're not quite getting it right and you're losing all the time. This is another example, guys. This is one that we were looking at this morning in the group. Okay, so this is the whole supply zone. This entire move up. This is the refined supply zone. Now, if I had taken this trade like this, okay, this would have got me down to 1R, and I probably got stopped out at break even. But it's not a loss. That's all right. I normally move to... No, actually, I tighten my stop about 50% after we move down. So we'd still be in the trade here. If you'd gone for the refined entry, yeah, you might be looking at nearly 3R for that same low, opposed to that one, which is like 1.3. But you get stopped out. So, you know, it's pretty simple. It's pretty simple. That the power is in staying in trades and being better at staying in trades. Even if it means you drop a couple of R, it's not the end of the world. And in the early days, when you're learning how to trade and learning how to get good at trading, aiming for, let's say aiming for this sweep down here, aiming for a 2R consistently is much easier and much less stressful than aiming for these really tight refined entries that keep getting stopped out all the time. And you look at that and be like, oh, it's 8R. I could have got 8R at that trade. Well, you didn't though. You lost. So it doesn't really matter what it could have been. It wasn't. So that's how I like to trade, and I would like you guys to trade in that way as well until you're funded. You know, this here itself, if my broker was open, I'd be taking this all day long. Look at that. Got everything in line. Okay. Push down, impulsive moves, imbalance. That's a lovely trade there. You could have taken that, stop above that high. Why do we think now that that high is safer than it was before? What's it done?
Because it broke the structure. That's the one we used to break the structure.
So it's broken
To the
this kind of,
downside.
yeah, it's broken this kind of medium-term structure. Okay, it's broken this.
liquidity.
Yeah, took liquidity to the left, look there. Okay, so it raided out on those highs. Okay, that is a pretty clear setup to me. And although it hasn't broken major structure yet, that is a risk that sometimes you will take. Okay, because everything else is bearish. We've had these multiple moves down. This is just a wick, and this didn't leave behind any demand. So there's no reason for price now to reject off this. There's no reason for price to reject off that either. Okay, because that didn't break any highs. That didn't break any highs. This didn't really leave, I mean, there's kind of a demand zone there, but it's not really that mucky. If I was trading right now, that to the low would be a pretty good trade. In fact, I'll leave this one on, guys, and I'll fill you in on how it runs. But that, to me, looks like a pretty decent trade. So sometimes just sitting on your hands and waiting for a clearer entry to commit, you know, is a really good way of doing it. That is the entire move up, just like that is the entire move up. You could have refined it, taken like a refined zone like this, but you know, it's a bit messy really. So this is why your journaling, your back testing will be so important, because you'll learn so much about the marketplace. If I've seen this, I would have always traded above the swing high. I always set my stop above the swing high. This is why I like this one better, because this is the swing high, so I can place my stop above it. I know that price has wicked into this and pushed down with an impulsive move now, so this is used up. This is done for. We can delete this now. We don't worry about that anymore. It's gone. Okay, and this, as you can see, impulsive, then return, and we've got a nice move happening here already. So the backtesting, the journaling process will teach you how to read the market like this, and I would hazard a guess that we're probably going to get a push down. We might even push down and sweep out this liquidity over the next couple of days. So let's see what happens. Any other questions, guys?
Can I ask something about that trade?
Of course you can.
Yeah, there is an area before that one in 5 minutes.
So where are you looking?
The one that is just passed, just below the 50%. I actually thought that if maybe, because it already broke there, wouldn't you have placed maybe
Are you talking about?
expected?
Are you talking about this zone here?
Yeah.
Okay. See, that to me isn't a tradable zone, and price has moved into it. For a supply or demand zone to be really tradable, it needs to raid. It needs to have a raid on the highs. So what we're looking at here is probably an hourly zone. Yeah, so that is an hourly zone, look. Okay. It's the up move before the down move that leaves imbalance. So might even be a 2 hour zone. Yeah, there you go. So there's the clean candle, look. Okay, I know it gets a bit confusing when you zoom in. This candle, push up and push down, that's the entire zone. So personally, the way I like to trade is I like to frame the entire zone, because that's only the safe, that's the only safe way of trading these areas is getting that entire zone framed up. You will sometimes get these kind of really small refined zones holding, but you will also get them wicking out and then moving in your direction. And again, unless you are consistently profitable trading these zones, I wouldn't trade them for the time being. Stay away from them, frame the entire zone. You look at that, what happens is, and this is where these bad habits form, you look at that and you think, do you know what, let's trade 50% of that, let's hold the same trade, and what's going to happen? If I get that win, I'm going to get myself a 24-1. Okay, and that's what excites us. But in these early days, you're not going to win them all the time. They're going to be wicked through. So if you can get these zones holding on slightly higher time frames, like the 15-minute time frame, you can see now you would have missed out on a trade that is moving really, really nicely. We are very close to breaking structure already. So these zones, when you are looking at the higher time frame ones, they're much more reliable. So much more reliable to trade a 15-minute zone or a 30-minute zone than it is to trade a 5-minute zone or a 3-minute zone or a 1-minute zone. You've got to be prepared for the fact that if you're trading really low time frames, you need to be on the charts all the time. You need to be prepared for the fact that the zones are going to be blown over and over and over and over again. And you might need 4 or 5 different trades before you catch your winner. If your head's set up for that and you can manage that, then great. But most people aren't. I know I'm not. I know I couldn't handle it.
Another thing, can I ask one more thing? Can you please go back to the 5 minutes?
Mm-hmm.
Okay, when the market taps into the zone, we go down to the 5 minute, right? And then we observe how it moves and all of that. So when you're looking at the 5 minute, is it a bad thing if maybe you take that candle, the candle going up, just from the 50% going up and rating those highs?
Yeah.
And then you use that movement as your what can I call it?
As in, like, your signal to get into the trade?
Yeah, and then you take 50% from there.
You can do. You can. I mean, but the problem is that how do you know that move is finished? There's no There's no safe way. The only safe trade right now is the only way you can decide whether a high is safe or protected is if the move it generates breaks new structure. That push up hasn't yet broken any structure. That high would be protected, and it would be this entire move here, look. Okay? That high would be protected when this price impulsively closes below and breaks structure. And that means not a wick below or a really crappy close. I want a nice impulsive move like this with lots of candles below the low, if that makes sense. So that is a major break of structure, because we've got lots of candles underneath it. Okay, that's why we can take this trade with a stop above the previous high, and it will win more often than it will lose, because it's a protected trade. And if you were holding out for, say, 2R for your first position, okay, you're nearly there already. So it's not. I know what you're thinking of and what you've probably seen and heard from other traders. It's just not necessary. You don't need to get these really refined positions and these really refined trades. It's great when you do get them, but they don't land off more often than not. And more often than not, you get stopped out, then you get pissed off and you stop trading, and then you miss the actual move. So it's worth, until you are funded and out of your day-to-day routine. That means quitting your job, maybe, I don't know, whatever you do on the day-to-day at the moment, unless trading takes you away from that, there's no need to refine. Like I said, you can trade 2R trades consistently. Some of the best traders I know trade 1R trades, and they have like a 70-80% strike rate, and all they go for is 1R consistently. They take 10 trades. Oh, I'll lose you all. Pause. Right, there we go. Yeah, so when prices are low like this, so we're looking at US 30, okay, when prices are low like this, what a lot of people do is they go back in time and they look at these old kind of demand zones. In my opinion, they don't hold much value anymore. I mean, I'm sorry, but there's not many big players that are holding positions open for, January 21 for 18 months, 19 months. There's not many institutions that are doing that. They'll close these positions because they've not taken up. Actually, they would have been closed off anyway because this move up here, if they had any in. So I don't like going back in time. For me, what I do is this. When I'm looking at my charts, I zoom in. 2 seconds, guys. People are just messaging on there. No one is. You need to click the new link. Right. So for me, I'm looking at what I can see. That is a zone that I would have paid attention to, and it had some sort of reaction. But anything past this line here that I can't see, I'm not bothered about. And the reason why is this. When price wants to reverse, it will give you structure. What will happen is something like this. It will give you structure that you can trade. You don't need to use old zones. You can just wait for price to give you a zone. It will create something for you to trade from. It has to create something for you to trade from. If it doesn't create something, then it's not a trade we want to be getting into. So you are right. The likelihood is this is probably going to go long. And we've already had a zone here that it's created.
Yeah.
Yeah? So if we look at a lower time frame, we got a break of structure there. Okay? You got to be careful with these zones. Anything counter trend, as a bit of a tip I give you, wait for a second break of structure. Wait for that to happen. That's a real good way of deciding whether or not to enter into it. Because
the demand zone, basically, you're trying to...
wait for a second one, okay, and a second break of structure, because that will give you a real good indication now that we are going long. Make sure all the other elements are there. You've got obviously your raid. This will have raided something. That will have raided something. You make sure all the other elements are there, but wait for a second break of structure. I wouldn't trade, for example, this. I wouldn't trade that now, because there's nothing to say that this isn't just a complex pullback. This could just push down further.
Yeah, to confirm what you're doing, basically.
So that trade is not, I would say, a high probability trade. Okay, it might go up. It might not. I don't know. Ultimately, there's no guarantee that that will happen. So a second break of structure will give you more reassurance. But even the second break of structure, it could make that and then it could still push down because it's counter trend. So wait for the buys to look really obvious. When you're trading counter trend, wait for the buys to look really obvious. The good news is that because this is a low on a really high time frame, okay, it's going to give you loads of calls. It's going to give you loads of reaction. This is a good example. Okay, this one here, look. Break of structure. 2 seconds. What's going on here? Alright, break of structure there, look. Break of structure there. Okay. You could have entered here. You would have got stopped out. This is why counter trend moves I'm just not a huge fan of.
Yeah.
Let's say you might have caught that one and you would have probably tried to hold. Let's say you got it 50% of the zone. You probably tried to hold up to there. You wouldn't have met your target and then it whipped down on you. So for me, there's so many opportunities in the marketplace these days. You can see on my right hand side, I trade a few pairs, probably more than you guys should be trading just at the moment. I would pick kind of 2 or 3 and stick with them. There's so many opportunities to trade at the moment. For me, there's no real need to trade counter trend. I did catch that one there, look. I caught that little counter trend move. And I took out, I think, 1R, maybe 2R, because I didn't like the movement. But then, as you can see, it just tagged my zone and then reversed. Didn't get my position that I wanted. So, there are some, that was a really big impulsive move and then a return. There are sometimes reasons to trade counter trend, but the best trade is always the pro trend move. Now, let's say I'd not been paying attention to this counter trend move. Let's delete all of that. What is the more obvious trade right now?
Sell.
That's sell. Okay, really nice move. Okay, got an imbalance there. We've got an imbalance there, look.
Yeah.
50% of the zone. And whereas I was pissing about trying to get a 1R trade out of it, and I think I ended up with 1 loss, and I was really close to my target. This was on Thursday night, and I needed like 1R. So I tried to get it out, and it just did not go my way. I ended up, I think, break even or maybe in a small loss. That 1R that I was chasing, if I just actually traded in line with trend, I could have got myself into an 11R position. So there's no real need to trade counter trend. There's too many positions pro trend available for any need to trade counter trend. And if we're trading counter trend and we want to see something really, really good, wait for this to happen, as in like major break of structure, and then we can trade stuff like this all day long, because then the likelihood of this continuing up is much higher. Now we've broken a major break of structure. Now we know buyers are very heavily in the marketplace, so that's the sort of thing I'll be looking for to trade counter trend, rather than looking for a buy just because it's at, you know, an all-time low or a low that it's been for quite a while. So, you know, for me, there's not much on US 30. That is the only real zone that I'm looking at. And if price gets up to there, great. I will definitely watch structure. You know, if it gives us a really clean, like what is going on here? If it gives us a really clean, like, reversal, and we get, you know, really nice pattern, really nice slowing of momentum, push up, you know, yeah, I will trade something like that. But right now we just got one candle, and that's going to take a week or two to develop, really. So, you know, just keep an eye on it. After these big moves we've had, guys, be prepared for the fact we might get a bit of consolidation in the marketplace. It's not unusual for price just to piss about for a little bit now we've had and not really give us anything worth trading. We might get something like this, but that might be an entire week's worth of price. So just be cautious. Whenever you get these big moves, look what happens after the big moves. You get price like mucking about for a little bit. That is, let's see how much time that is. That's 2 weeks. That's 2 weeks of price there. So, you know, after any big move down, watch out.
Basically.
Say again?
After you get these big moves, you get quite a bit of consolidation, basically.
Yeah, and you just get like really naff trades. So, you know, it's great when the big moves happen. I mean, that was a month. That mucky price action there was a month. And look, you might have got something in there, to be fair. Let's have a quick look. Let's zoom in. Let's see what we would have got. It's just all over the place. That's the thing. That's the reason why I don't like it, you know. So that's the start of the day. Yeah, I mean, there's a little position there maybe you could have taken. Raid, breaker structure, return, but not a major breaker structure. Raid, not a major breaker structure, return. You know, there's just, you get these like average positions, and then the one position that looks quite good doesn't hold. So, you know, you've got to be careful in these times. And this is another reason why sometimes it is just better to hold out for a 2-hour trade, because you might have got a 2-hour trade off that. You definitely wouldn't have got a 5 or a 10. So, yeah, it's worth just being cautious now we've had that big move down, and just wait for the really clean setups to appear. Right, guys, I'm getting to the point now where I'm pretty much out of time. Are there any final questions for me?
Hello.
Hi, Ash. How are you?
Sir, I am fine. How? Sorry for bad English.
That's okay. That's okay.
Because, sir, which is time frame we have to consider for major breakup structure, like 1 hour or 2 hour?
Yeah, I like stuff on the hourly, really. If I'm trading a major breaker structure, it's anywhere between the 1 and the 4 hour charts. That's what I'm looking for. So for me, if I'm looking for a major breaker structure to continue a higher time frame trend, it's above the 1 hour. If I'm looking for an entry breaker structure, then I'm waiting for something on the 15-minute or the 5-minute usually. So I want both. I want a major breaker structure to push down like this, and that gives us a major breaker structure here. And then when I'm looking for a position, maybe somewhere in here, I'm waiting for a breaker structure on the 15-minute also pushing down, or a 5-minute also pushing down. Once I've got major breaker structure to the left and a breaker structure on the 15-minute, then I'm happy to trade.
Thank you.
You're welcome. Right, guys, unless anyone has any final questions, that's us done for today. I will package this recording up and I'll get it on the Discord so you can watch back on it. There's been gone through a lot of information today. And, well, yeah, look, thank you for turning up. I appreciate you guys, and we'll catch up in the week.
No worries, man. Just a quick one,
Yeah,
Chris.
of course.
You said you were going to walk through the trades that you did this week. Are you going to do that on a YouTube video?
Yeah. What I'll do now, because it's taking a bit longer, what I'll do is see these, they're all highlighted in purple at the moment. It means that I need to do my journaling for them as well. What I'm going to do is I'm going to put together a video for them anyway, because it was such a good week. We had some really, really good trades. That's a good example. Just coming back to what we were discussing earlier about counter trend move, double breaker structure. Okay, and then we entered the trade like this. That's a good example. I took profits off here, but I took most of my profit off here. But that was a counter trend play. I waited for a double breaker structure, and then I entered when we had a minor move here. That would have been great if we got up there, but we didn't. So, you know, this happens on counter trend moves. So that's a good example of a counter trend move. What I'll do is I'll put together a proper video on it probably tomorrow, and I'll try and get it released in the next couple of days or so you can guys can see.
Just because you said it on the previous video when you put the Bitcoin up, I think on Friday. wondering when you were going to do that, because obviously I want to see what happened, man.
Yeah, no, I will. I will get it done as soon as possible. I'll try and get it done tomorrow, and then I'll get it edited and put up as quickly as I can, all right?
No worries, no rush, man. Thanks for that, Chris.
Nice one. Cheers, guys. Catch up soon. See you later.
Cheers.
Bye.